Good day all. The session's presentation topic is on house rent allowance, which is covered under section 10, subsection 13A of the Income Tax Act of 1961. House rent allowance is paid to all as a part of their salary emoluments, but HRA exemption is available only to those employees who stay in a rented house and pay rent regularly. Now, what are the HRA rules given under the Income Tax Act? Here we have three criteria, and among the three criteria, whichever is less will be exempt. The first criteria is excess of rent paid over 10% of salary. So, how much rent are you paying? And the amount of rent more than 10% of salary. What is the meaning of salary? We need to understand. Excess of rent paid over 10% of salary for the relevant period. We need to discuss about the concept of relevant period as well. The second criteria is HRA received for the relevant period. HRA received for the relevant period. What do you mean by relevant period? Relevant period is nothing but the period of stay in a rented house in the previous year. How many months you have stayed in a rented house, you have paid rent, because there may be an occasion where an employee might have stayed for say 6 months or 8 months or 9 months in a rented house, and thereafter he might have shifted to his own house, or he might have shifted to his relative's place where he is not paying rent at all. So HRA received for the relevant period. And the third criteria depends on where the rental accommodation is located. If the rental accommodation is located in a metro city, say Delhi, Mumbai, Kolkata or Chennai, then 50% of the salary will be considered. But if the rental accommodation is situated other than the metro cities, then 40% of salary will be considered. And among the three criteria that we just discussed, whichever is least will be exempt and balance of the amount would be taxable. Now, some important points that you need to note. What is the meaning of salary? Salary meaning is same as a salary for employees not covered under Payment of Gratuity Act. That is basic plus DA with conditions and commission, provided it is given as a percentage of turnover. Now, some important points that we need to note. In case if the employee is shifting from one city to another city, or if his salary changes, his basic salary changes, his DA changes, then we need to calculate this HRA for monthly basis to find out what is the HRA, the annual value of exemption or annual taxable value as well. So let's understand this concept of HRA with the help of an example. Let's have a look at this problem. Prakash is working for Suvarna Limited in Mangaluru since 2013. His basic salary during the previous year 1920 was rupees 18,000 per month with an annual increment of rupees 1,000 received in September every year. DA at 75% of basic, 40% is included for retirement benefits, and a commission of 0.75% on the turnover of rupees 20 lakh achieved during the year. He also received HRA at rupees 6,000 per month. He stayed in a rented house till January 2020, paying a rent of rupees 9,000 per month, and thereafter he shifted to his own house. Compute taxable HRA for the previous year 1920. So a very relevant problem. Now we need to first identify what is the relevant period. Now it's given in the last sentence. He stayed in a rented house till January 2020, paying a rent of rupees 9,000 per month, and thereafter he shifted to his own house. Meaning to say, from April 2019 to January 2020, that is for the period of 10 months, he stayed in a rented house in this particular problem. So relevant period in this problem is 10 months. So let's take the solution. I start with a note. I record note 1. Relevant period is from April 2019 to January 2020. That means he stayed in a rented house from April 2019 to January 2020. That is for a period of 10 months. So period of 10 months is the relevant period in the problem. Second point that we need to take into account is salary for HRA. Salary for HRA. Remember, when we are taking salary for HRA, it will be salary for HRA for relevant period, which is 10 months. We have already considered that in point number 1. Meaning of salary is basic plus DA with conditions plus commission. Commission as a percentage of turnover. The meaning of salary is same as we had for employees not covered under Payment of Gratuity Act. Now basic is given. What is the basic salary of Mr. Prakash? It is given that his basic salary was rupees 18,000 per month with an annual increment of rupees 1,000 received in September every year. Received in September every year. So important thing is we will take into account 18,000 we assume is a salary into 10 months. Since we are talking about relevant period, we will take only 10 months. So it is 1,80,000. 1,80,000. Then we have DA. DA is also given in the problem. DA is 75% of basic. So I take 1,80,000 into 75%. This is the DA. And it's given that 40% is included for retirement benefits. So I take 40%. A portion which is included for retirement benefits only must be included in the meaning of salary. So this is 54,000. Remember, this is basic for 10 months now because relevant period is 10 months. This is DA for 10 months now, and in that 40% is included for retirement benefits. And then we have commission. What is given relating to commission? His turnover for the year is given 20 lakh. Turnover is 20 lakh. And he is given a commission of 0.75%. 0.75%. Remember, this is for the year. So we need to convert it for 10 months. So 10 by 12. That will give us the commission amount for the period of 10 months, which works out to 12,500 rupees. So total salary, therefore, salary for relevant period. Salary for relevant period, that is relevant period of 10 months, would work out to 2,46,500. So you get 2,46,500. So we have ready number available. So then we can go to the preparation of format, computation of taxable HRA, computation of taxable house rent allowance. So as usual, we will have two amount columns. We'll have two amount columns. I record over here HRA amount received. Now very important point, HRA will be received by all every month. So HRA amount received per month given in the problem is 6,000. So 6,000 into 12. So HRA received is 72,000. Remember, that's HRA for the year, 72,000. Then I write less exempt under section 10, subsection 13A. Once again I take least of the following. Least of the following. First is HRA received for the relevant period. HRA received for the relevant period. So HRA per month is 6,000. Point to note, the relevant period is 10 months. Though it is received for 12 months, exemption is available only for relevant period. So first number that we get is 60,000. Next we take excess of rent paid over 10% of salary. Excess of rent paid over 10% of salary. Now how much is the rent paid? He stays in a rented house paying a rent of rupees 9,000 per month. So it is 9,000 into, he stays in rented house for 10 months, over 10% of salary. So 10% of salary we have calculated 2,46,500. So we get 90,000 minus 24,650. 24,650. So we get a value 60,000, I beg your pardon, 65,350. 90,000 minus 24,650. That will be 10% of 2,46,500. So 24,650. So you get 65,350. And then, now very important criteria as given in this particular problem, there is, the city given is Mangaluru. It's a non-metro city. So we take 40% of salary. Remember, if it was a metro city, we would have taken 50%. Since it's Mangaluru given, so 2,46,500 into 40%. 2,46,500 into 40%. So you will get 98,600. 98,600. And now, among the three, whichever is less. So we have 60,000, which is the least. So 60,000 will be the exemption amount, whereas the balance of the amount is 12,000. That will be taxable HRA. Taxable HRA. So I hope the concept of HRA is clear. So we'll go through it quickly. It is given that he is shifting to his own house. Mr. Prakash is shifting to his own house in the month of, he stays in a rented house till January. So possibly he shifts from month of February to his own house. So period of stay in rented house is only for 10 months. That is from April to January, which is 10 months. So we need to now calculate salary for HRA. That is for a period of 10 months, for relevant period only. So salary meaning of for HRA is basic, DA with conditions, commission, provided percentage is given. So basic salary given was 18,000 into 10 will give you 1,80,000. DA is 75% of basic. So 75% of 1,80,000. Of that, 40% is included for retirement benefits. So when you calculate, you get 54,000. Commission is given, the annual turnover affected by Mr. Prakash is 20 lakh. He is given a commission of 7.5%. Since this is for the year, we need to take it for 10 months. That is for relevant period. So into 10 by 12. So that will give you 12,500. So therefore, salary for relevant period when you put together is 2,46,500. Then we draw the format, computation of taxable HRA. HRA amount received. He receives HRA of 6,000 rupees for entire 12 months. So that will be 72,000. Exempt under section 10 subsection 13A. List of the following. HRA received for the relevant period. Period of stay in a rented house is only 10 months. So he receives HRA of 6,000 rupees for a period of 10 months. So it is 60,000. Then excess of rent paid over 10% of salary for the relevant period. We have already calculated salary for the relevant period, which is 2,46,500. So he is paying a rent of 9,000 rupees for 10 months that he has stayed. So it is 90,000 minus 10% of 2,46,500 is 24,650. So 90,000 minus 24,650 will give you 65,350. And the third criteria is, since the rented accommodation is based at Mangaluru, it is a non-metro city, so we take 40% of salary. So salary is 2,46,500 and 40% of that would work out to 98,600. So among the three criterias, the least is 60,000. So write 60,000, this is the exempt portion of HRA, and 72 minus 60, therefore taxable HRA would be 12,000 rupees. I hope the concept of HRA is clear. Thank you.